Working our way back to the flat line after a down pre-market. Let's get to Bob Bassani. Morning, Bob.
Yeah, we're off the low, still down 16%. A little bit of a risk-off day. You take a look, what's risk-off? You want to look at ARC. You want to look at semiconductors. You want to look at metals and mining. Those are the three classic risk-on, and they're all down today. And defensive stuff, healthcare, Merck, Humana's up, Procter's up in the consumer staple group. Why are we down? Well, the data out of Europe wasn't great. The Spanish CPI was a little higher than expected. But overall, you know, look, it's going to be a tough setup here. We've had a big move up. The Fed is not going to come out and say, we've declared victory against inflation. They're going to say there's a lot of work to be done. And they don't want the market to think they're going to be cutting rates at the end of the year. They're going to throw more water on that. It's a little bit of a tough setup. Then you just see what Jim was talking about, these huge advances in tech stocks that we've seen this year. I mean, Google's up 11 or 12%. NVIDIA's up like 35% on the year. AMD has been up huge on the month. It's up a big amount, some 13, 14%. So there's a lot of little room here to breathe for the next few days. The important thing is the trend, though. We keep drawing these trend lines, and I hope you've all gotten the message here. Basically, last week, middle of last week, we broke through that long-term downtrend that started with the highs in January of last year and lower lows, lower highs. That's what a downtrend is, and we're breaking through that. And yes, technical analysis matters in this, no matter what you think about it. People are pointing that out. Look at the strong start. What you want to look for is, are more stocks advancing than declining? That's the sign of a stronger market. The S&P is up about 6%. The advanced decline line for the NYSE is the highest since going back to September. That means a lot more stocks are advancing. 66% of the S&P 500 is above its 200-day moving average, which you wonder, is that a little, a lot? Above 50 is good. Above 60% is really good. Above 70% above the 200-day moving average. Well, that's arguably, you're getting into bull market territory in one way or another. The other thing that's really important is just how broad the rally has been. Value stocks are up this month, but so are growth stocks. The S&P is up almost 6% on the month. And the high beta stuff, this is stuff that will move more than the market does by definition of what high beta is. But it's really moving a lot more than the market. This is often technology stocks. You could see up 16%. The point is the breadth of the market is really, really wide, strong, no matter how you particularly advance it. One thing we could use is a few more new highs. We don't have a lot of them. On Friday, we only had a small handful of new highs. Caterpillar, GE, a bunch of the big global industrials, Borg Warner were breaking out. URI was breaking out. One or two steel stocks were up. One or two retail stocks were up. Starbucks hit a new high. We'll keep an eye on that because we're going to get earnings shortly. And a couple of insurance names like Chubb. That's not a big list overall. So the point is, I don't think the market is necessarily overbought. There's a lot of room to hit new highs here. None of them are tech stocks here. Here's the big earnings for next week, this week. Remember, folks, we've got a big number here. CAT, UPS, and then AMD, Alphabet, Amazon, all the big names a little bit later on in the week. We'll keep an eye on that. Remember, there's no big gotcha here. The market can still advance.